Good evening and namaskar. The result season is progressing well. Many companies are reporting good results, some are reporting bad results, some are reporting mediocre results. Now it is for us to sift out good ones and consider them for investment. Now let us see. We have seen TCS. TCS has performed very wonderfully. Now, Infosys is another bellwether company in IT sector, and it is improving fast. It is, of course, far behind TCS even now. Infosys is a global leader in the next generation digital services and consulting, artificial intelligence, digital service, etc. It has presence in 45 countries. It has 3 decades of experience in managing systems and workings of global enterprises. Founded by illustrious people like Narayan Murthy, it is again in the hands of very good people like Salil Chowdhury, CEO and MD. Now, Salil Chowdhury, CEO and MD says after these results, we had a strong start to FY20 with constant currency growth accelerating to 12.4% on year-on-year basis and a digital revenue growth of 41.9%. So important thing is digital revenue growth is 41.9% in this quarter and constant currency growth is 12.4% overall on a year-on-year basis. He says this was achieved through our consistent client focus and investments which have strengthened our client relationships. Usually, people who go to TCS, Infosys, etc., they are staying with them. That means they are happy with the services. So, Salil Parekh also hints. Consequently, we are raising our revenue guidance for the year from 7.5% to 9.5%. So the range given earlier was 7.5 to 9.5. Now the range given is 8.5 to 10%. So the company has gained a lot more confidence after the results of Q1. The digital constant currency growth is 41.9% year on year. Overall constant currency growth is 12.4% year on year. Quarter on quarter, constant currency growth is 2.8%. Operating margin is good at 20.5%. Now, the Q1 has seen large deal signings of a huge sum of $2.7 billion. $2.7 billion in one quarter. The financial services, now let us look at how each segment has grown. Financial services segment has grown 9.5% year on year. Retail segment has grown 5.2%. Communications 19.9%. Energy, utilities, resources and services 15.8%. Manufacturing 10.9%. High tech 14.5%. Life sciences 3.3%. Others minus 4%. Overall total 10.6% year on year. Now, if you look at the various geographies, how it has grown, North America 13.5%, Europe 7.2%, rest of the world 5.9%, India degrowth of minus 1.1%, total 10.6%. Now, this is where TCS has been scoring. TCS has been concentrating on England and Europe and less on North America. Where there are more problems. So TCS has scored very well in England, Europe, etc., whereas Infosys is still more dependent on North America. The number of active clients is 1,336. All big clients. Now, during the quarter, 112 new clients have been added. That's a great thing. If you look at employees total is 2,29,029, 229,029. of whom women employees are 37%. Attrition rate of employees is still high. Annualized consolidated attrition rate is 23.4%, which is high. Infosys is making efforts to bring it down. Now let us look at the Q1 results with reference to the last year Q1 and previous quarter of Q4. The revenues in the current quarter are 21,803 crores, whereas Q1 last year 19,128 crores. The growth is 14% year on year. In the previous quarter of Q4, the growth was only 1.2%, 21,539. There is a growth, but the growth is 1.2%. Year on year, 14%. Quarter on quarter, 1.2%. Operating profit is 2,553 crores in the latest quarter, compared to 2,303 crores in the Q1 of last year. The growth in operating profit is 10.9% year on year. Not bad. Operating profit has grown 10.9% year on year. And previous quarter, the operating profit was slightly higher at 2,638 compared to current quarter 2,553. That means there is a degrowth of 3.2%, minus 3.2% in operating profit on a quarter basis. Now net profit, if you look at that, current quarter is 3,802. Q1 of last year 3,612. So the growth is 5.3% year on year. But previous quarter revenue was and profit was 4,058 crores. So therefore there is a degrowth quarter on quarter too by minus 6.8%. Now basic EPS is 8.83 compared to 8.3 in the Q1 of last year. So 6.2% year on year growth. Whereas last quarter 9.37, there is a degrowth of 5.8%. Now the share face value continues to be at 5 rupees. The final dividend declared is 10.5. The interim dividend declared earlier was 7. Special dividend declared is 4 rupees. We can look at it in dollar terms also. Dollar revenue has grown year on year by 10.6% and 12.4% in constant currency year on year. Now sequentially, if you look at that, Q1 revenues have grown sequentially by 2.3% and 2.8% in constant currency. Digital revenues in Q1 are at $1,119 million, which is 35.7% of total revenues. Digital revenues are growing quarter after quarter. Now year on year the growth is 41.9%. Sequential growth is 8.6%. So in dollar terms, operating margin guidance is maintained in the range of 21% to 23%. Now, Infosys says effective from FY 2020, that is current year, Infosys expects to return 85% of the free cash flow cumulatively over a period of 5 years through either share buyback or dividends, etc. 85% of the current cash surplus they want to distribute over a period of 5 years. Maybe through share buyback or maybe through dividends, etc. Now, the Chief Operating Officer, Praveen Rao, says, we had a good quarter. So, Infosys confidently says it is a good quarter as we continue to leverage our digital navigation framework to help our clients build and nurture their live enterprises. Large deal TCV was highest ever at $2.7 billion. So, the large deal TCV wins are very high at $2.7 billion. Segment growth was also robust, with all large regions and most verticals growing at double digits year on year in constant currency. Our first now Chief Financial Officer Nilanjan Roy, he says our first quarter results and continued focus on operational efficiencies gives us the confidence on our revenue and margin guidance for the year. He further says, continuing our objective of improving shareholder returns, we have revised our capital allocation policy towards investors to distribute 85% of the free cash flows cumulatively over a 5-year period. Now, Infosys is improving. See, sometimes Infosys has been performing below par. Now slowly it is improving. Salil Chowdhury, Praveen Rao, Nilanjan Rai, all these people are putting their heads together and doing their best. Whether it will catch up with TCO is a different matter. But compared to others, TCO and Infosys are both head and shoulders above. So we can depend upon TCS more, Infosys slightly less. But both are good companies. Thank you for listening. I will be back with you with another good company. Thank you.